Welcome back. Tonight, we're exposing a mystery that shapes your life. Where does money actually come from? Most people picture government printing presses or vaults of gold, but the truth is far more surprising. The majority of money isn't printed by the government, it's created by banks, almost out of thin air. Here at Entrepreneurial Edge channel, we break down the world's systems so you can navigate them with confidence. Understanding how money is created is key to understanding our economy and your own finances. So, let's pull back the curtain. Forget the image of coins being stamped. Instead, picture your local bank. When you deposit your paycheck, you might think your money just sits there, but it doesn't. That deposit triggers a powerful process of money creation. The digital number you see is just the start of a story that multiplies your deposit across the entire financial system. Ready to see how it works? Let's dive in. This is the real story of money. The secret behind modern money is called fractional reserve banking. When you deposit money, your bank only keeps a small fraction, say 10%, in reserve. The rest, it's lent out to others, for car loans, mortgages, or business ventures. Banks aren't just storing your cash. They're using it to create new loans, which is how they make money. This system works because not everyone withdraws their money at once. Your $1,000 deposit means the bank keeps $100 and lends out $900. Now both you and the borrower have access to money, effectively increasing the total money in the economy. This is the magic of banking. Loans create new money. The bank didn't print anything, it simply expanded the money supply by making a loan. This is just the first step in a much bigger chain reaction. Let's see how your deposit multiplies. Here's where the money multiplier effect kicks in. The $900 loaned out gets spent, maybe on a new computer. The computer store deposits that $900 in its own bank. That bank keeps 10%, $90, and lends out $810. The process repeats. Each new deposit leads to more loans, more deposits, and more money created. Your original $1,000 deposit can support up to $10,000 in total money through this cycle. Most of this money isn't cash, it's digital, existing as numbers in bank accounts. When you get a mortgage, the bank doesn't hand you cash, it credits your account, creating new money with a keystroke. This is how the vast majority of money comes into existence, not from printing, but from lending. Loans create deposits, not the other way around. The money supply grows as banks make loans, multiplying your deposit throughout the economy. It's a system built on trust and digital ledgers, but who keeps it in check? If banks can create money by lending, what stops them from going too far? That's where central banks step in, like the Federal Reserve. They set reserve requirements, controlling how much banks must keep and how much they can lend. Raising the reserve slows money creation. Lowering it speeds things up. Central banks also set key interest rates, making borrowing more or less expensive. Higher rates slow lending. Lower rates encourage it. Finally, they buy or sell government bonds to inject or remove money from the system. These tools let central banks fine-tune the economy, balancing growth and inflation. Without these controls, the system could spiral out of control, but even with them, risks remain. This system isn't a secret conspiracy, it's legal and regulated. Governments allow banks to create money through lending to fuel economic growth. It provides capital for businesses, families, and entrepreneurs, but it's a double-edged sword. Too much money creation can cause inflation, prices rise, and your savings lose value. That's why central banks must constantly monitor and adjust the system. There's also the risk of bank runs. If too many people demand their money at once, banks can collapse. The system relies on confidence and careful oversight. In the end, money isn't just printed, it's multiplied through lending, under the watchful eye of central banks. Understanding this is the first step to true financial literacy. Thanks for watching Entrepreneurial Edge. Stay curious and keep questioning the world around you.